Hello there, everybody. Welcome to you, and thanks very much for taking time out of your weekend, a holiday weekend. In fact, for some of you, we do appreciate you doing that and being with us today. This is Craig at Max Trading. I'm here along with Chris and Eusebio, and we are very glad to include each of you in the Max community today, as well as others who will watch the video playback. This is a really nice trading community, and many of you will be taking a Max course with us in September, and that gives you also a lifetime Max membership. So we look forward to trading with you for many years yet to come. The Max community is also just enjoyable. It's a lot of fun. Provides a ton of ongoing support and assistance, along with free trading workshops at least 2 or 3 times every month. And that's a really nice opportunity to continue improving your trading skills and keep up with the very latest techniques. As you know, the markets are always in a state of change, and new ideas can be very important to help us meet the challenges of trading, and we like to pass those along to our members. It was more than 4 years ago that Eusebio began to see the need for a way to help us deal with the changing flow of price in the marketplace. And so he began developing and testing and what eventually became the Max Enhanced Trade Format Indicator. That's way too much of a mouthful, so we just call it the ETF. It has proven itself not once or twice, but again and again and again as a very effective addition to Max trading. And so now we have added the ETF to all levels of Max training. It's in every Max course. And that means no matter what you select, you will also get the ETF indicator along with the companion and learn how to use it, and all of that at no additional expense. The companion, by the way, is our new directional bias indicator. It makes a huge difference in trading. You'll like it a lot. And all of these things together, proper training, correct price action analysis, effective indicators, understanding of global context, all of these things, they give you a real shot at the kind of trading that you want to be doing, the kind of trading that really makes a difference in your life. So it's an exciting time to get in on the Max system, to learn how to use it, to take that big step toward meeting your goals. Could be that you just need a little source of extra cash every week, or you might be really wanting to help a friend or a relative, or perhaps some worthy cause has caught your attention and you have a real desire to help, and you can just imagine yourself being in a position to help. Max is the place to begin turning those dreams into something real, into reality. And I think you'll be very glad that you attended the webinar today, or that you took time to get in on the video playback. And by the way, we do not expect you to just simply take our word for it. We know there's a lot of junk out there in the trading world, and it can be hard to sift through it and find what's real. And so we want you to have opportunity to see for yourself. And I'll be sending you an invitation, if you've not already received one, to attend live trading webinars. Our next one is scheduled for Friday of next week. And it gives you a chance to see Max trading methods in live action on real-time charts, so that with your own eyes you can see the effectiveness of the Max trading system. I hope you'll take advantage of that opportunity. Eusebio is the developer of ETF along with the companion, and there is no better selection of someone to take us deep into the world of Max trading and show us what it's all about. Eusebio is a phenomenal trader. He is also a skilled teacher, and I really think you will quickly come to a point of appreciation for his passion in helping his fellow traders become successful, to get through that wall of losing a little bit, making a little bit, losing a little bit more, maybe breaking even. He can help you to get past that, and I appreciate so much his desire to be a help. Eusebio, thank you for all that you do. thanks for taking time to show us max trading today, and I will pass the microphone along to you.
Thank you, Craig. Hello, everyone. Welcome to this MAX presentation. What I'm going to present here today is some concept of what the MAX is and what the ETF concept more especially is and why it has been introduced. And I will show some example of recent and some past trades. I will show also very quickly the power of compounding when we have a profitable trading system. And then we will make an overview of the two courses we will propose to you today, the MAX ETF Primer and the MAX ETF Standard course. And then there will be the usual special offers for the webinar attendees. And if you stay until the end of this presentation, there will be a prize drawing. So someone attending this presentation will win a free MAX Primer course, but you will need to stay until the moment the drawing is made. And after that, if necessary, we will have a Q&A session. So before starting presenting the MAX, let me just quickly present who I am, because some of you perhaps don't know who I am. So if you have recognized with my accent, I'm not used to speak English. It is not my mother language. So I am, in fact, a Belgian trader. I live between Belgium and France for years and years and years. And I am a full-time Forex trader since 2008, in fact. But trading half-time for many more years, for around 35 years in almost every market. Not exactly all the markets. So I have experience in the stock market, in the options market, in the futures market, and of course in the currency, so the Forex market. While I was a part-time trader, I was in an IT industry. I was a service engineer in the IT industry, and for around 28 years. And during the 15 last years of that activity, I have had the privilege to work for big banks in Europe. And this has given to me the opportunity to be in contact with some traders in these banks, and to see how they consider the market and how they trade the market for the objectives of the bank or for their private customer having a large wealth, in fact. And so and since 2009, I am the privilege to be one of the MAX instructor after its founder, Dr. Jim Pruitt, as I will mention later, passed away in 2009. So what I'm going now to present is some aspect of the MAX trading system, what it is, and I will illustrate that through some example. And then I will just mention a few words about the money management we have with the MAX and the kind of result we can obtain. So the MAX has been, in fact, created many years ago by late Dr. Jim Pruitt, known as Tiger by his student. And this is why you see the tiger face on our slides. It is a tribute to Jim. And Tiger, because he had a strong temperament. And so a strong temperament because his aim, and knowing that his time was counted, his aim was to build and to give for his students a very powerful and very reliable trading method or methodology. And this method, in fact, is easy to apply or easy to understand, but requires some important keys to apply them successfully. The two most important keys are work and commitment. Within the MAX, in fact, we have some concept, but a lot of rules. And these rules take time to learn and then to apply correctly. And this is why these two element, work and commitment, are the most important keys to become successful with the MAX and, by the way, with any trading system, any other trading system. But there are also other skills which must be developed by each trader: discipline, patience, because as I have said, the MAX is driven by rules, and so we have to apply the rules and to consider trade, to enter and to exit a trade when the rules apply. And this requires discipline and patience until all the conditions are fulfilled to take a decision. So Persistence is also important. Persistence consists in continuing taking the trade after some losing trades. We never have a 100% winning rate with whatever the trading system we would like to use. We will always have losing trades. And in fact, as you know, most probably, the winning rate is not important. In fact, you may have a very successful trading system having a low winning rate, and you may have losing system having a high winning rate. So the winning rate is not important, but the winning rate will have an important impact of the length of the losing streaks you may face. And persistence consists in continuing to take your trade while you are in such losing streaks, provided you have a good trade risk management and a good money management. Of course, they will help you to survive these losing streaks. Because we have many rules and we have to take into account many details and several types of details, the MAX also require a lot of concentration. So the MAX also requires confidence, and for the confidence, there are several types of confidence. A trader can build confidence in the market, confidence in the MAX, and confidence in himself or herself in the way to apply correctly the MAX. Now, when we define a trading system or a trading method, I consider it is important to define what we call a trading method. And for me, I consider that we need to define, in fact, or to predefine what are the movements we want to trade. And these movements will constitute, in fact, the trends we want to trade. Inside a trend, we may have one or several of these tradable movements. And so we need to define when and how and when such movement may start. And the beginning of such a movement will be defined within the MAX as an entry pattern or several possible entry patterns. Each entry pattern will constitute what we call an entry setup. So a setup will be a specific price structure, and we will have to validate that entry setup. And to validate an entry setup in order to have a potential trade, the validation must always be made under three types of conditions. First of all, the technical conditions. The technical conditions are all the conditions with the chart we are trading with, for example, how we use some indicators and so on. We have also to consider the risk aspect. What is the risk we can take for the trade? Can we take a rather large risk, or should we restrict to a very small risk? And we have also to consider the global context. And so the global context is made of all the elements which can influence the price movement. For example, the news releases, the decision by the central banks about their interest rates or their daily operations, but also any geopolitical events. We have some important examples we are facing these days for several months now. All the problems in Middle East, the problems with the trade war between USA and China, the slowing down of the economies in many countries around the world, the Brexit in UK and the European Union. So these are the type of geopolitical events which influence almost every day the price of many financial instrument, not only in the Forex but also in other markets. And we may have also other conditions, like, for example, timing aspect, when we specifically trade small time frame like intraday time frame. Then once we have a trade and we open a trade, we have to consider how to handle the trade. What do we do with that trade? In such a way that at some point, we have to reduce the risk. The risk is always the most important aspect we consider with the MAX. It's always the first priority of a MAX trader, in such a way to reduce the risk in a progressive way whenever we can, until the risk is completely removed from the trade. And in such a case, we have a risk-free trade or a guaranteed profitable trade. And at that moment, we can focus our attention in the way to optimize the profit we can extract from the trade. And in that process, so we will pay attention to two specific processes, so the scaling technique and the scale-out technique. And then we will define also in the trading method how we consider the movement or the trend we are trading can exhaust. I will never say how a trend can reverse, because we are never sure that the trend will indeed reverse, but what we can see on the chart is when the trend or the movement we are trading is exhausting, in which case we have a good final exit point or exit level for the trade. After that exhaustion, the price can indeed reverse the trend, or the price can stay in a concession zone for some time before possibly resuming the same trend, in which case we will have another trade opportunity following the same approach, because we will have a new movement in the same trend. So this is the structure on how we used to define our trading system. And in our courses we describe each of the points we have in this plan. And more specifically, the MAX is in fact a trend following method. The M of the MAX, which is an acronym, stands for momentum. In fact, we want to take a trade when we are sure that the price has enough momentum but also enough volatility. The combination of both is extremely important. The A stands for acceleration. Acceleration doesn't mean that we want to see the price accelerating. No, it is the scaling technique which allows us to accelerate the profit we extract from the trend whenever we have the opportunity to scale in without adding too much risk to the trade. The risk must always stay under control when we scale in. And then the X stands for exit. And we have two types of exit. We have partial exits and we have a final exit. The partial exit is what I have called previously the scale out technique. And then the final exit, at some point we close the remaining position we are ending because the trend is exhausting. So in the past, when we have not introduced the ETF aspect within the MAX, we had also some possibility to trade the counter-trend movement, so we defined a trend and a counter-trend movement. But nowadays, the counter-trend aspect of a classic trend is no longer worthwhile. We can forget that idea. We still observe counter-trend conditions in a movement, but they become way less important, and I will show in a moment why I have said that. And so within the MAX, we have a very strict trade risk management. As I have said, this is the first priority of the MAX trader, and a very strict money management. For example, we explain that we can take for any trade any risk we want, provided it is a reasonable risk. And so we have to define what a reasonable risk is. And so because it is a trend following system, the MAX applies to any time frame and to any market. Any tradable financial instrument, provided there is enough volume, can be traded with the MAX. So in the futures market, in the Forex, of course, the indices, for example, some commodities in the futures market, the stock market, the option market, the bonds market, so any big financial market can be traded. It is also important to understand what the MAX is not. The MAX, for the moment, is not a scalping system. Or at least what is known as a traditional scalping system. We are not interested, especially in trying to catch just a few pips in the shortest period of time. Scalping the market that way may be a very challenging trading approach. Similarly, the MAX is not a news trading system. We don't try to catch these important spikes the price can make when we have a news release with a big surprise, because these spikes are very fast. And so with the delays we have in the order execution, so we may have bad price execution. And so the volatility may be extremely high. And as you know, the volatility may be in favor of the trader, but also against the trader in a very wrong way or bad way. And as I have said previously, the MAX is not an elementary buy and sell system. It's a method with more complex and flexible entry and exit techniques we explain in our courses. So what we call an entry setup, as you have realized, represent in fact a high probability opportunity, which are based, as I have quickly explained, based on technical aspect, risk conditions, and the global context. We have always to take our trades in agreement with the global context. For example, if we understand for a specific day that the context is negative for the pound, so every pair containing the pound or for every pair containing the pound, we should consider shorting the pound. And for example, for a pair like the pound yen, we have to consider to short the pound yen pair. And this global context is, for me, the most important aspect in trading. So, and this is one of the points. So we will introduce new tool in the future. So within the MAX. So to help our trader to use the MAX correctly. The exit setup, in fact, is something which is the mirror of the entry setup. Once we open a trade, in fact, the aim is to close the trade later. And the exit setup, the way we consider them within the MAX, is in fact based on the idea of high-risk situations. High-risk situations based on technical indicators, based on pure price action behaviors, or a combination of both, but also on timing aspect and every concept we use for the trend reversal or the movement invalidation. So when I say the movement invalidation, I mean the movement exhaustion, which can be a trend reversal, by the way. And so, in fact, one of the remarks some students may have, or some who consider to become a student may have, is with the MAX we use several indicators. But the way we use the indicator is not a problem. First of all, we do not use the indicator to predict what the market will do. We use the indicator and more generally all our exit setup as a way to quantify when the risk which is appearing along a trade becomes too much important. So it's a way to quantify the importance of the risk. And when this risk becomes too much important, we have to take an action. We have to decide on an action in order to reduce that risk, either to limit the loss of the trade should the trade be closed with a loss, or to bank our profit to reduce the risk we will have on the remaining position. And so we never try to predict what the price will do. We quantify at some point when a risk is appearing along the trade. And we use all these kind of exit setup to define the best possible exit level along the trade. So we have introduced several years ago the ETF concept and its companion indicator in order to resolve or to solve some challenges all trend following system may face when observing some type of price behavior. Along the years, for several years now, we are seeing a poorer price action with smaller movement, in fact, along the day. If you observe regularly the average daily range, for example, of all the pairs, these average daily ranges have decreased dramatically these last years. And so when we have poor price action, when we have small price movement, when we have tight ranges, trading with a trend following approach becomes more challenging. We may miss some large movement. This is a consequence of using among our entry setup some indicators, for example, simply because it's true an indicator may lag, but this is not the main problem. In fact, the lag of an indicator is never a problem if you don't use that indicator to predict what the price can do, but to analyze the relationship between the behavior of the price and the behavior of an indicator. But what another problem is when the price is moving very fast, the indicators may be late to react. And because of that, we may miss some interesting movements. So, and in the past, I have always been frustrated by the obligation we had to make the distinction between a trend and a counter trend. And so with the MAX ETF, we have solved that, that aspect of trading. So, an example of the decreasing average day range. So here on this chart, I represent two pairs, for example, the euro US dollar and the pound US dollar on around 8 years. And we can see these two charts represent the average daily range in dollars. And we can see that sometimes we may have high average daily range, but regularly the average daily range are decreasing, and this is typical of all the pairs. And nowadays we are still at a very low level of these average daily range. We can see that on around 3 or 4 years, So we have had a continuous decrease of the average daily range. This is not only true for the major, but it is also true for the other pairs. I take just two examples, the Euro Kiwi and the Pound Yen, and we see also the regular decrease in these average daily range, creating this smaller movement we have day after day in many of the pairs we would like to trade. And so this has forced us to introduce some improvement within the MAX. So the MAX ETF and its companion indicator is the solution we have introduced to overcome these problems, these challenges. And I'm going to explain that on some example. The ETF concept, is now introduced in all the MAX courses we have, as Craig has explained previously, and especially in the two we propose to you today, the MAX ETF Primer and the MAX ETF Standard. But we have also three other levels, the MAX ETF Lite, the MAX ETF Sum, and the MAX ETF Advanced, which are more advanced level of the MAX courses. And in a very imminent future, we will have also a MAX scalping approach. So stay tuned when we will present this approach. And these two courses will allow you, with the ETF concept and its companion indicator, to trade many more movement. We'll be able to catch many more movement. And when the price will unfold a nice trend, we'll be able to trade a larger portion of this trend. And so with this concept, we also combine, in fact, the trend and the counter-trend portion of a movement into one unique movement, into a unique movement we will call a directional momentum movement. So let's see just some example of this concept I have just explained up to now. In the following chart I will use these notations. Mo means a momentum entry. It corresponds to an entry setup. An XXX will represent a complete exit. An MX will represent a partial exit or a scaling out, and an SC will represent an additional order or a scaling in. We add to a position. And R represent the risk we take on the trade, and RRR will mean the reward to risk ratio. So let's consider just some example. This is an example of a recent movement on the pound Aussie. On this chart, you will see several tools we are using. First of all, around the price, we have what we call the ETF line, which are these two yellow and orange line. And you can see that these two lines, which form a small channel, are extremely regular and not very sensitive to the pullbacks the price can make. We have also two other moving average. We have the home base, which is a long-term moving average, and the Mo line, which is this gold line for a short-term consideration. They are used to explain some feature of the movement we want to create. For example, we have a concept called the max price mode, which describe or defines the mode under which the price is moving. Is the price moving in a trend mode, in a counter trend mode, in a consolidation zone mode, in a choppy mode, in a spaghetti mode? So we have all these price modes which take into account the different types of momentum and volatility the price can exhibit, and this influence, in fact, the way we consider our entry setup and some of our exit setup. Then we have also here the companion indicator at the bottom of the chart, which is made of two lines. A slow bias, as we call it, is the line in green and red, and this slow bias shows, in fact, the directional movement. On a technical point of view, when the slow bias is green, we have to consider only long trades. When the slow bias is red, we will consider short trades. And of course, we will make the choice of the direction to trade depending on the context. If the context is too short, this pair, we will consider only the short trades. And we have a fast bias in blue and orange, which will help to validate some of our entry setup. So you can see also some vertical line. These vertical lines represent Important event along the day, they are the timing aspect. Important market opens or close, like the Frankfurt, the London Open, and so on. But also horizontal lines, like this one here. We had just one here on this chart. It is a white horizontal line. It is called a max price level. It is a possible supply or demand level, and we consider it to decide where we have to make our entries and sometimes our exit. And then we have some technical indicator like the one I'm showing here, which is the stochastic of the RSI indicator, which will be used to define some of our exit techniques. So, but we have several types of exit techniques. Exit technique based on such indicators, exit technique based on the price behavior, exit technique based on the combination of both, exit technique based on timing consideration, and exit technique based on the trend reversal or the movement invalidation. So on this example, so whenever we have a small here angled white line, this represents an entry. It may be either our initial entry. For example, here we have a more entry, which is called a short because we consider the short trade, short ETF S&P more. This is a special name we give to our entry setup, which remind the structure the setup has. Another angled white line here is another entry setup. It is called the short ETF REMO. I will show you in a moment another type of entry. So we have on this example two trades with the Max ETF primer. Whenever we open a trade, so the trade is considered as made of 2 units. 2 units because when we will have an exit condition, we will close 1 unit and we will keep 1 open unit for a later close, either when we will get another exit setup or when we will have the trend reversal or the movement invalidation. So the choice will be to the trader to decide how to make the final exit. And so in this example with the Max ETF primer, we had a short entry setup here on this level. We get immediately here what we call a long bar. A long bar is always an example of an exit setup. We explain in our course how to exploit a long bar to make a partial exit. MXO is a momentum exit or partial exit. We close 1 unit. And on this exit, so that unit has got a number of pips of 18 pips. And we keep in this example the second unit until we get another exit setup. It happened that 2 bars later, we get another long bar. It was just an example with almost 2 successive long bars. And this second long bar has given another exit because a long bar is always a nice exit setup, guaranteeing always a nice profit. So, and the second unit has been closed here with a nice 67 pips. The total profit was 85 pips, and because the stop loss was 28 pips large, a rather large stop loss, but not a surprise with a volatile pair like the pound Aussie, this trade represents a reward to risk ratio, a realized reward to risk ratio of plus 1.52 R. R being the risk. If you take a risk of 2%, this trade represents a profit of 3%. So, a few bars later, we had another entry setup with this red candle here, which was called a short ETF REMO. REMO means a trend resumption. And again, you see here a long bar, but this long bar has not triggered an exit. And later on, the long bar has been continued by other long bars. And finally, the price has reached here this max price level. And when the price was rejecting this max price level, when the price was pushing upward above the max price level, so we have decided here to close the 2 units of the trade. Because between the entry and that exit, we had no other exit setup triggering. We may have an exit setup, but when we have an exit setup, we have to wait for the price to reach the exit level we decide for our exit. It happens in this example that the price has failed to reach the exit level by just 1 or 2 pips. And so this means that an exit setup is not necessarily followed by an exit. We have always 2 steps: identifying the exit setup, defining the exit level, and if the price hit that level, we make the exit. It was not the case here, despite the fact that we had a nice long bar exit setup. The second trade so has got a total number of 79 pips twice because we have 2 units. And so a total number of pips of 158 pips. And because the stop loss was a bit larger, 36 pips, this represents also a nice reward to risk ratio, 2.19 R. And so we can see with the Max Primer just 2 trades that day during the London session before the US Open, so with a nice 3.7 R result, which is already a nice result. 2 trades, 2 profitable trades. With the Max Standard, we have another vision of the trade because we can consider, first of all, we will have more entry setups, we will have more exit setup, we will have more ways to control the risk, so we can consider progressively increasing the position we are trading by adding to the trade when it is appropriate with our scaling and scale out technique. And this is the same movement with the Max ETF Standard. First of all, we have been able to open the trade previously before the Max ETF Primer has been able to open the trade on this place. So here we have a Max ETF Standard entry setup, which is called an ETF BOMO, followed immediately by a long bar, which has created an exit situation, and the price has hit our exit level, giving a small profit, but a profit is a profit, only 6 pips. After that, the price has continued to pull back without reaching our stop loss, which was a rather large stop loss in this case, and then the trend resumed to the downside, and has given in this area an opportunity to add to the trade. SC means a scale-in. It was the scale-in number 1, followed immediately by a long bar, giving an opportunity to make another MX, closing 1 unit. Which one? The second unit of our first entry, with a nice 21 pips profit. So we were left at this point with the 2 units of the scale-in number 1. And then another long bar, giving another exit profit, and exit and a profit. We close 1 unit of the scale-in number 1, giving a nice 68 pips profit. And this MX has been followed 2 or 3 bars later by another scale-in, the scale-in number 2. So we add progressively to the trade. At this point, we have 3 opened units, the 1 remaining opened on the scale-in number 1, and the 2 new units on the scale-in number 2. And then a long bar with no exit like in the previous example, and then the final exit closing 3 units here when the price has rejected this demand level, because it was a demand level. And so the second unit of the scale-in number 1 has got a nice 158 pips, and the 2 units of the scale-in number 2, which correspond to the Remo in the Max Primer, has got 79 pips for each unit. So, and this gives a nice total of 411 pips, representing plus 6.4 R reward to risk ratio. And you can see the difference between the Max ETF Standard and the Max ETF Primer. With the Max Standard, we have almost double the result of the Max ETF Primer. Typically, with the Max ETF Standard, we will increase the profit of the Max ETF Primer by 30% to 300%, so almost 100% in this case. So this was another example, again with the pound Aussie in the 5-minute time. I will go faster here. So this was a nice movement starting from an ETF, starting from a max price level as a supply demand. And with the Max ETF Primer, we had only a valid entry at this point. So with a small movement, we could have got for a 1.4 reward to risk ratio. With the Max Standard, so we would have been able to open the trade starting at the very beginning of this movement here. And you can see the different steps. This was one unique trade with several entries and exit. The first entry, a BTMO, a first MX here, a scale-in number 1, an MX number 2, a scale-in number 2, no MX here. We had an exit setup, but the price has failed to reach the exit level. And you see several exit levels as well as here. We have also a way to ratchet our exit level, so to trail our exit level whenever this is possible to improve our exit. Then a scale-in number 3, an MX number 3, an MX number 4, an MX number 5 here, and then a final exit. We could have made also here the XX6 instead of the MX5 because the price was rejecting this max price level. We have another max price level here, but I have illustrated here an exit when we had in fact a trend reversal here. So this exit represents this ETF trend reversal and correspond to a long entry setup. When we have an entry setup in one specific direction, this may represent the exit of a trade in the opposite direction. So we have several alternative ways to consider our final exit. And so you can see the type of result between the max standard and the max primer, so a nice increase. We have multiplied the result by more than 3 in this case with the scaling technique, while keeping the risk under control. The 2 examples I have shown are on the 5 minute. This is another example with another max price level, and you can see how the price has paused along that level before crossing that level and resuming the movement. So this was a max ETF primer course with just one safe and perfect mode, and you see the type of result, a 2R profit, and with the max standard, so one unique trade with several scale in and scale out with a nice 7.7R result. We can also trade higher time frame, of course, as I have said, and other instruments. This is an example of a long trade on the crude oil with exactly the same structure of trade, an initial entry, a first exit, a last exit for the max ETF primer, and several scale in, several scale out with the max ETF standard, showing the difference of results. So 5.8R for the standard, 2.4R for the primer level. So 30-minute time frame. But we can also trade, for example, another higher time frame, the daily time frame, with an indices, in this case, the Dow Jones. The Dow Jones, the average, the Dow Jones industry average. And so in this up movement, each trade lasts several days, of course. With the max ETF, there were 2 available trades in this up movement. You see the result here. And with the max standard, so we had one unique trade, long trade, with several exit, entry, and so scaling and MX or exit, producing a very important result on a period of several days. So starting from September, here 21st of September until 25th of January, so on a period of around 4 or 5 months. So any time frame, any instrument which can be traded. You can trade futures on the indices, for example, or ETF, what are called also ETF, which are special types of shares, so mirroring some other instruments, so like indices. Of course, we don't always have winning trade. We may have losing trade, but the important point is the loss of a losing trade will be always a small loss. This is a typical losing trade. Once an entry has been made, the price may possibly move somewhat in favor of the trade, giving a first profit with an MX, and then immediately after the price retraces, and when we are forced to close the second unit with a loss, this loss can be larger than the profit of the first unit, creating a losing trade. But you can see that the loss is a very small one, minus 0.11R. This is a very, very tiny loss, which can be recovered very easily with one winning trade. On average, a losing trade will have a loss of minus 0.5R, usually. Sometimes a little larger, very often a little smaller, but we can say on average minus 0.5R. So easily recovered with one winning trade. And there will be situations when we will have no trade at all. When we recognize a very special market conditions we call the choppy mode. So in a choppy mode, it will be much more difficult to trade because we will have smaller movement, or we will have a more erratic behavior of the price movement. So, and when we are in a choppy mode, usually the wisest choice for the trader is to skip taking the trade which may appear, because we never know how far the price can go. It can be a very small movement before a reversal, or at least a pullback with some volatility, because in fact, by definition, when the price is choppy, we have no momentum or perhaps a small momentum, but we may have a high volatility. And so it's not easy to find good trades. But if the trader decides to take the trade, he will have or she will have the possibility to optimize the result on the trade with the approach we explain how to trade such movement in a choppy mode. Gerard, the levels I have shown are not pivot points. No, they are not pivot points. So they are supply and demand levels. And so we prepare these levels every weekend. So every Saturday, in fact, I prepare the levels for a lot of pairs and other instruments each Saturday. We will explain in a moment, and they are available for the entire, they are valid for the entire week. We will explain in a moment how you can benefit from some of them. So now when we have consistency in our approach using the MAX, and when I say consistency, this does not mean consistency in the way to generate profit, but consistency in the way to apply the MAX methodology, then the profit will follow. And when we have the profit following, we know that a profit can be very often a nice profit. The losses are always very small. We can use the compounding effect to grow the account in terms of money management. And just to give you an example, if we consider a risk of 2% and we target to have an average profit of just, let's say, 60 pips per day, which represent a 2R reward to risk ratio. Indeed, in this example, why 2R? I have considered an average stop loss of 15 pips, okay, 15 pips. And 60 pips, which can be considered to be made on one trade or with several trades, represent the sum of the two units. And so when we calculate the reward to risk ratio, we need to calculate the average result of the trade. So we need to divide that number by 2. And so 60 divided by 2 is 30, and 30 divided by 15 is 2R. So if a trader is able, whenever he or she trades every day, a 2R profit, even with a monthly withdrawal of 5% of the account size, 5% of the account size, so the account can still grow very, very importantly. You can see that after 1 month or 21 trading days, the account has doubled. After 2 months here, the account has more than quadrupled, so multiplied by 4. And after 3 months, here 3 months, 63 days correspond to approximately 3 months, so the account has been multiplied by 10. But of course, don't get me wrong, obtaining even 2 hours per day is a real challenge. This is the first challenge. It requires to be consistent in the way to apply the entire methodology. It requires to trade every day, which is not necessarily obvious. For example, myself, I trade on average 2 or 3 days per week. 2 or 3 days per week, because there are days when I consider the global context is not favorable for trading. So this kind of objective may take a little more time, but this kind of spreadsheet can give you an idea of what you can achieve in a rather short period of time. And a third difficulty we have never to neglect is some days you will be able to make a larger profit than 60 pips. Some other days you will make a smaller profit, and some other days you will have a loss. And so with some losses, it may require a little more days to achieve an objective. For example, if your objective is to multiply by 2 your account, is to double your account, it will take some days, but you will have a good idea on how many days approximately you will need to increase your account at your objective level. So, and this is the power of compounding and uncompounding when you have less favorable conditions. And so the courses we propose, so there are in fact 5 levels. The Max ETF Primer course, which is a very basic level of the Max, as Chris will explain in a moment. We have then the Max ETF Standard course, which is our flagship course with the entire methodology. And we have an in-between level, which is called the ETF Lite courses, which consider a little more possibilities compared to the Max ETF Primer. And generally, the ETF Lite course is used as a refresher by the students who have taken previously the Max ETF Standard course. For those who have taken the Max ETF Standard course, the ETF Lite course is free. So We have two higher level courses of the MAX, which goes much more into the details, into the price action, which is the MAX ETF SAM, and into some other consideration like we go deeper into the news release analysis, we go deeper into the money management and the trade risk management. I explain also how we can use the concept of currency strengths to try to identify which currencies are strong, which currencies are weak under the global context also, of course, and how we can define and exploit specific situations I call discretionary situations, which allow to optimize the profit usually, not always, but usually from a movement we want to trade. And so this is explained in our MAX Advanced course. But today we propose to you the MAX ETF Primer and the MAX ETF Standard, as Chris will explain in a moment. And so with the MAX, in fact, so the MAX is in fact a trading methodology based on sound concept. During the course we explain why this concept works, and some of these explanations are linked to the behavior of the big boys in the market, in fact. And during the training we always pay attention to several points, to different important aspects. We use some indicators, but they are used only as a guide. We never trade these indicators. They are just a guide to help us to better understand the price action, because we trade the price action. And we have specifically a very solid and sound trade risk management and money management, because in fact the first priority we want to teach to our student is the trade risk monitoring. The first priority of a MAX trader is to control the risk of his or her trade until the trade becomes a risk-free trade. And during all these courses, we attach a lot of importance to the coaching aspect through the different activities we have. One important aspect of these courses are the homework we assign at the end of each training session. We have also practice session and several other follow-up activities like workshop, like a forum, like so these practice sessions I have explained. Sometimes special practice sessions we have introduced recently, so during the week. And so this is what the MAX is. If you have any questions about what I have explained, so feel free to post your questions in the question area. We will answer them later, or Chris or Craig will answer to them while the next presentation will be made. And now my pleasure is to give the mic to Chris, who will continue this MAX presentation. Chris, the mic is yours.
Hey, thank you, Eusebio. Hello, everybody. Hi, everybody, and thank you very much for coming along here. I'm partner with Craig and Eusebio in the MAX trading system. I'm based in New Zealand. This will be our 65th set of MAX courses. So as you've heard, we've been running since 2008, 2007, and have put over 2,000 people through the course. So we're reasonably experienced and kind of know what we're doing most of the time. Okay, one of the really important pieces of the MAX is that that makes it stand out from other courses, that we ask you to do homework. You don't have to, but what we do is we'll run through the session for the day, explain what the entries and or exits are, and then ask you to find some charts and send examples of what you think you understood the session was about on the chart. And then what we do is we get the charts back here and we look at them to make sure that you actually understand what's going on, so that you've marked them up correctly. I'll show you an example of that, what it's like in a minute. And so it does three things. It makes sure you actually understand what was going on in this course. It's not just a PDF and a video that you watch and you think, oh yeah, I've got it. And then it's completely different when you hit the real world. It makes you an active participant, and that it takes it out of your head, and you actually have to get your hands dirty marking the charts up. And it also crystallizes your training, so it makes it tangible. It's no longer just a mental exercise. So here's an example of what the homework looks like. We'll send the charts through. We give you all the templates and the indicators. We've got little videos on how to set things up if you've not used MetaTrader before. So it's all pretty simple. And if necessary, I can helicopter in and set things up for you. It's all pretty basic. haven't had to do that for quite some time now. And on the right-hand side is a reply. These don't actually match up with the chart there, but it's just to show you the sort of detail that you get when you get a reply back from me or Eusebio about how you've marked your chart up. So the first one says, the first entry is perfect, second entry is not exactly correct. With your setup bar, the Bollinger Bands are narrowing, showing a tight consolidation zone. You need to draw a support level and wait for the breakout. So there's lots of extra info goes into the replies, and it really does pay to read them because it reinforces what you've learned in the course itself. The courses that we're producing, as Eusebio said, standard and the primer today. The ETF standard is made up of 7 sessions and has got over 8 different entry styles. So there's plenty of ability there to get into trades and stuff like that. There's a whole pile of comprehensive and very precise exits that you can use. And it has the profit acceleration built in. What that does is it can boost your profits from 30% to over 300% just by being able to scale in and add to your orders in a really, really safe manner. One of the things that we're quite hot on with the Max is being risk averse. And so a lot of the times we won't get into trades because we think it's too risky, and we get out of them if we think the risk is increasing too much. And even though we have like a particular risk when we risk amount when we get into a trade, on average, if you have a whole series of losing trades, then the average loss is half of that risk. So, and that's for the losers. That's not including the winners. So we are incredibly risk averse. We want to protect our account as much as possible, and that's why we call our money management enhanced. The ETF primer, on the other hand, is just here for a taste. It's to give people an idea of what we're about so that they can go on and do the ETF standard. It only has a couple of entries, so you don't capture every movement that's out there. There are some exits. It is a profitable system, but there's just not the precision and the forewarning of exits going on that there is in the standard. If you take primer, sometimes you can get it on a trade and it will go for quite some time, and then price will come back and there's your signal for getting out of it. With the standard, because of a really cool setup that Jim actually produced back in 2007, 2008, if there's a very long movement or even a short movement, you can tell pretty much where it's going to stop by using his particular indicator, and sometimes to within 1 or 2 pips. It is incredibly precise. It's quite cool. So we use that a lot, and it allows us to make more profit and get out faster than something like the primer can. Ah, you're doing it now. Thank you, Eusebio. So here's what our Newswatch page looks like. It shows a list of the news that's coming up. This is for last week. And around those times we avoid trading because the volatility can impact on your account. And we say, okay, if you, yeah, there's a lot of detail in it. The information on how to use this information is at the bottom. And we also have a top 10 list. So I've just been doing it this week. It's kind of nice doing this. The average daily ranges for the pairs are beginning to increase again. They shrunk a little bit this week, but they're beginning to increase. And just recently, there's only been 4 or 5 pairs that have been worthwhile looking at because the rest haven't been moving that much. We have kind of a cutoff point of $750 average daily range, and last week and this week were the first time in about 6 to 8 months that they've actually been 14 pairs or more above that sort of arbitrary cutoff point. We look at 28 pairs, so that's the 28 majors or semi-majors, and list the top 14 up here. So if you're going to be trading and you want to get good movers, then go for the ones that are moving the most, like the pound yen, perhaps the pound Aussie, the pound Swiss. And to further refine things, what we do each week as well, or like I said, when I say we, I mean Eusebio, we go through and select, based on the news, which pairs of that top 10 list would be the best on a daily basis. So if you're trading on Tuesday, you'd pick the pound dollar and the pound yen to be your first choices, and then maybe the pound Kiwi, the pound Aussie to be your second choices of movements. And if they're not moving, then you can go back to the top 10 pair list and find something else that perhaps moves. But right at the very top of all this, and we go through this each week in our scrolling parties so that you get lots of opportunities to see what's going on. We also have a list of critical events that are going on around the world. This is the global conditions. And at the moment, the pound is top of the pops. I haven't heard much from Italy, but mind you, I haven't been keeping that much of an eye on it. We've got US doing silly things all around the place. And so by keeping an eye on these, you can get a better idea on perhaps which way the market's going to go, and so you're better suited for any impact that global news might have on you. And at the very top of all this, one more thing, we try and help traders as much as possible. And something that Eusebio has done is he's put together a couple of videos on Brexit, on how to trade the conditions at the moment. And right at the very top, Eusebio, keep scrolling up. Yep, under Brexit, it's got how to more safely handle Brexit news. And you can download the videos there that Eusebio's put together, as well as his PowerPoint presentations, to give you an idea on what you should be looking for the pound and its possibilities. So we're trying to help you to become better traders and to get an idea on which direction the market's moving in. And there's going to be some more information coming out about that shortly, I hope, that Eusebio is working on now that we can use in the mags. So if we can go back to the presentation, Eusebio, that'd be great. And if you have questions, okay, Larry's asked, do we have other indicators for other platforms? Yes, we've got some for Ninja 8 and TradeStation. There's various ones. They keep upgrading those other platforms, and when they're upgraded, we don't see any new indicators coming back. What happens is if you want to use our indicators on another platform, we're quite happy to give you the source code, the MetaTrader source code, so that you can get a program and to port them across to that other platform for you. So there's no problems with that. And a lot of the times members will say, hey, I just made this for Ninja 8, here are the indicators. And so we've got Ninja 8 indicators for that. Multi-charts was the other one I was trying to think of. And if you come up with something unusual, so we just give you the source code so that you can have it built for yourself. The indicators themselves are reasonably generic, so there's not too much coding to do on that side of things. It's how we use them is the important piece. And we do use our indicators in a different way than most other systems would use. So, for instance, our stochastic RSI, we have a different view of it than another trading platform would. We don't go for overbought, oversold conditions so much. Wrapping up here, the courses are detailed and precise. What we go for is find the setup and then execute the entry within about sometimes half a pip on a 5-minute chart, 1 to 4 pips. So they're very precise, and this also includes the method that we go for the exits. So there's no messing around. You really do have to be focused with this stuff. It works on anything that moves, pretty much. Metals, gold, oil, indices. They've even got people trading Bitcoin successfully with the max. So it doesn't matter. So long as the chart is moving, we can get into it and keep you safe. Like I said, after the course, you've got lots of follow-up stuff. We are kind of sticky. We try not to go away. So you'll be invited to the forum, and you're welcome to post stuff in there. We had one gentleman there posting H4 charts there for quite some time as they progressed, so you could see how the trade unfolded over a series of days or weeks as they went on. We run practice sessions, the scrolling parties, on most weekends. If you're on the higher level of courses, you get a lot more of the practice sessions. But yeah, we try and have at least 2 a week a month for members. And over the last month, indeed, I got a bit silly, and we were running them almost every day here. So at the end of the day, we'd go back and review the whole day's session just to see what entries were there. So really solidifying things. Okay, the end result is that we want you to have a solid trading method and that you get as much support as you ask for. We know that trading isn't easy, but with the Max, you're going to have one of the most powerful trading methods that I've actually seen around the place. The entries, when you see them, are solid. The exits are excellent. I don't know, I find exits really easy and getting into entries quite difficult. So I really like something that sticks out and smacks me in the face that says, hey, enter here. And that's what breakout entries do when you can find them. The exits are just a piece of cake for me. But for other people, it's the other way around. They can find entries really easily and have issues with the exits. So we try and brush up on all that with the practice sessions after the courses and training you as well. What we want you to do is to achieve your goal. Here are the prices. The flagship course, which is a standard, with all the entries and the exits, etc., with the money management so that you can boost your profits and incredibly risk averse, starts on the 13th of September and runs for 7 weeks. And then there will be a bonus session after that as well. It's run at 3 p.m. New York City time each week for that period. The normal price is just under $3,000, but we're running a webinar special just for this course of $2,399. And I must say, I'm not too sure if we're going to be having another course after this, another series of courses after this. So this could be the last Max course opportunity you'll get until, say, February, March next year, which is like ages away. So if you're thinking about this, get into it now so that you can be ready for any large movements that are coming up in the future. And the market's beginning to move now. Craig has made payment plans available. He's also put together a training package. This will take something like 4 months of training. It's $2,679. It's really good value. So you have the primer course first, and then the light course, and then do the standard course. So huge amount of training and involvement and help and hand-holding from us. So look forward to seeing you on that. And the link there is at the bottom and also being posted into the GoToWebinar area. So, and on the next page, you say, thanks, is the primer tuition. So this is just for you to, for somebody to get a taste of what we're like, just to check us out. It's a couple of sessions, 6 hours live training. Like I said, it's just the basic entry levels and some exits. We still take great care, and there's a huge amount of information that goes into it. And if you just wanted to do the Primer Light package, 2 courses together are $759, and there are payment plans available. So just ask Craig, hey, I want to drip this out over several months. How do I do this? And Craig will tailor something for you. That includes for the standard courses as well. And if you have any questions, we'll be more than happy to answer them. Okay, so you don't have to buy anything from us when you do the course. You'll have access to the indicators. And if there's something missing, like I said, we can give you the source code so that you can get it modified to suit your actual platform. But we have people using Ninja 8 now. What course do I need to start? Well, Primer is the basic, and you'll get some of the indicators for that. Standard has got even more, uses more indicators than the Primer. Like the Primer is, like we say, just the basic. There's only a couple of indicators in it. So if you haven't traded before, then doesn't sound like it. But Primer is the basics, and Standard is the one that's got all the entries and all the exits and the money management and the profit acceleration.
Yeah, Larry is also asking, can I get more details on Primer? In fact, Larry, next weekend, so next Saturday, we will make another presentation which will go a bit deeper, and it will be a preview of the two courses. So I will make a preview of the content of the Max ETF Primer course and a preview of the content of the Max ETF standard course. So you will have more details next Saturday if you come next Saturday, but you should receive an invitation, an email invitation to follow this preview presentation. So there was another question by Don Chris. Which sessions are best to trade? Yeah, in fact, if you consider a pair, let's take for example the euro US dollar. Okay, but what I'm going to explain is valid for any pair. So you take the euro US dollar. The pair is made of two currencies, the euro and the US dollar. The euro is a European currency. The US dollar is an American currency. There are three European currencies, the euro, the Swiss, and the pound. And there are two American currencies, the US dollar and the CAD. And so this means that, in fact, the best sessions to trade for each specific pair are the sessions corresponding to their currencies. So for the euro US dollar, the European session and the US session. If you take a pair like the euro pound is made of two European currencies. So the best session for the euro pound is the European session. If you take a pair like the US dollar yen, the best sessions are the US session and the ASEAN session. So if you take a pair like the Aussie yen, two Pacific currencies, there are three Pacific currencies, the yen, the Aussie, and the Kiwi. So the Aussie yen, the best session is the ASEAN session. So generally speaking, this is not always true. There are some exceptions. The news release can create some trends outside the natural sessions of each pair, but also some geopolitical events or some important decision by central banks. So, but except these specific situations, there are natural sessions for each pair corresponding to their specific currencies. So this is true for small time frames, from the 1 minute time frame up to the 1 hour time frame. For the higher time frames, 4 hour and higher, there are no preferred session. All the sessions are similar, because with higher time frame, you are essentially, or the pairs are sessions independent, in fact.
So let's wrap this up. I hope to see you in a class sometimes. There's the non-farm payroll coming up this weekend on Friday with Eusebio, and then there's next weekend is another shot at asking us more questions if you have them. And I look forward to seeing you there and in the course. So thank you very much for your time today.
Bye everyone, have a great weekend, trade safe. I will leave the page open for just 5 minutes. After that I will close the page. Let me display my clock here. And so in five minutes, so here at 55, I will close the page. Bye everyone.